Hi, everyone. Welcome to today's video. I've got Jeff Clark with me again. Jeff, how are you doing?
I'm doing great today, Mike. Great to be back with you again, of course. So we have some very interesting and fun things to talk about today. So I'm going to jump right in. Tweet of the day, and this is one of your tweets that we want to use. You wrote yesterday in a tweet, this won't be the first time that Tesla and Elon Musk accepts Bitcoin as payment. That was sent out. You highlighted Elon Musk there, and he actually responded and liked your video. On top of that, over almost 45,000 people have watched that little clip now. So, Mike, what's your reaction to Elon Musk liking your tweet and so many people watching that clip?
I think it's awesome. I hope he watched the entire thing. And I really hope that Tesla considers basically hedging the upside cost risk of silver going. There's a lot, like we had said, there's lots of silver in electric cars, much more than in a regular car. And that silver, if you can lock in prices that are below 30, it's going to get, once prices are above 150, it's going to give whatever companies have large stockpiles of silver. It's like, one of the things that really got Southwest Airlines off the ground and made them big was they hedged their fuel costs. They bought contracts going way out, and for years, while the price of fuel was rising and went up to $140 for a barrel of crude eventually, they had these really low prices locked in that were years earlier. So their and a large component of flying is the fuel that's expended on each flight. And so Southwest had an advantage. Can you imagine if you own a trucking company and you're able to go to the pump and fill up for 20 cents or 30 cents a gallon? That's the same thing it would give you a competitive advantage. And so by stockpiling some silver right now, if they've got excess cash, and calculating how many cars they would need how many ounces of silver they'll need for the number of cars that they're going to expect to produce over the next 5 years. If they want an advantage over their competitors, this is one of them. Another tweet, though, that there was a reply. I talked about a man named Tony Galippi, and I met Tony at Test Live in 2013. And what was interesting, I was telling him about the merits of precious metals. He's telling me about the merits of Bitcoin, but he was from BitPay. And after that experience, I came back to Los Angeles and put my accounting team and the financial department together with Tony's company, BitPay, and we became the first precious metals company to accept Bitcoin in payment. But he responded to that video also, and he said, "Hey, Mike, I spent 984 Bitcoins on a Model S in 2013. So he had told me this story that he bought his Tesla for Bitcoin. So he spent 984 Bitcoins. So today, his car is worth $44 million and it still runs great.
Right.
I think that's hilarious.
Yeah. So, by the way, I mentioned yesterday about my open letter to Elon Musk. That's in editing now, so we hope to have that out soon. So, if anybody wants to see that, please subscribe to our newsletter and you'll get it right away the moment that it's out. It should be out in the next day or two. So, well, Mike, on to chart of the day. And this is from Tavi Costa, if I'm pronouncing Tavi's name right. And this is a chart of gold versus real yields. So, the real yield, of course, is what the bond pays. We usually use the 10-year treasury. In his example, he's using the 5-year treasury minus the CPI inflation rate to get the real yield of that bond.
Yeah, which I call it the CP lie. So it's not the real yield. It's sort of the fantasy yield.
Right. We know it's at least that low. But anyway, in his chart, right, the red line represents the real yield. You'll see the line is going up. He's inverted that. So actually, when the line goes up, the real yield is actually falling. But he did that. So
the real yield is negative, you mean? Yeah.
Right,
so
negative.
Right now, anybody invested in a 5-year treasury is losing about 2% annually. The Treasury's a 5% Treasury. I mean, a 5-year Treasury is just below 0.5%. It's like 4.6% as we speak. And so, I'm sorry, 0.46%.
Right.
And so when you take inflation away, you end up at just, you're losing 1.897. So basically 1.9% annually for loaning your currency to the government for 5 years.
Right.
I just can't believe it. It's an unbelievable situation that anybody would choose to do that.
Right.
But yes.
Well,
so the chart you're showing, though, it's been highly accurate at predicting the price of gold. The chart starts at the beginning of 2018, but it's almost dead nuts on the gold price until recently, when there's been the largest divergence in this entire chart has occurred since the third quarter of last year. What you see is that eventually the gold price catches up. And so this is predicting that there would be a very large move in the gold price, or an enormous move in yields in treasuries rising, so that this isn't as negative. Now, if the yields in the treasuries rise, the government's got a problem. The Fed has a problem. The Treasury has a problem. So they really can't allow that. And so that means that gold has to rise. And, who knows if we're at the bottom of this divergence or not, but it looks like it. And when it makes its moves, this is predicting, let me see, 18. So this is predicting, like today, we would have to have $2,200 an ounce gold for this to catch back up to even. But you see, a lot of times when it's lagging, when gold catches up, it blows past. This is what this chart is saying is within the next, year, maybe, get ready for $2,400 gold, $2,500 gold, something that's going to exceed this inverted Treasury yield curve here.
Yeah, so, the correlation has been very strong. You're right. So
right, and the divergence that has happened in the past 8 months or 7 months is the largest divergence in this entire chart. So it's the biggest. Gold is the biggest opportunity right now, according to this chart.
Right. Good way to put it. Right. Well, Mike, on to viewer feedback. This is from Goldenrod. Question: how do we know that he means Tesla, Apple, etc., have not made deals to stockpile at current prices? Now, I think he's referring to silver, but what do you think? How do we know they haven't already been doing that behind the scenes, Mike?
We don't. If they are, if they are, it would be, slow accumulation because we haven't seen a giant pop in price. And one thing that we have seen recently is enormous inflows into the ETFs for silver from this, the Reddit crowd. There's now, there was Wall Street Bets, and now there's Wall Street Silver, and there's a lot of people with discussions, and they're buying enormous amounts of silver through the ETFs, which I believe was not the right move. The right move, if they wanted to, they could buy near contracts on the commodities exchanges and take delivery, or there's supposed to be a delivery option on the ETFs, but if they take delivery, it'll expose the manipulation. One of the things that I did see is that at one point, the amount of silver that SLV had to take off the London Metals Exchange, 87% of all of the available silver was removed, leaving only 13%. If they had taken that last 13% somehow, then there would be a failure to deliver. The whole thing would be exposed, and we would be probably seeing a gap up, and we'd be approaching $50 silver today. But what we've seen is this huge increase in demand, but a fall in price. It does not make sense, and it shows that if you're going to buy precious metals, don't buy them for the short term. Buy them for the long term, and buy them to protect yourself and make enormous potential gains. And when you buy physical. Take delivery either yourself or in a metals account that is not in a commodities exchange vault. You don't want to be holding any metals that's in the same vault as the custodian for one of these big funds or the commodities exchange.
Right. And I'll also point out, Goldenrod, that these are public companies that you're naming, so they are responsible for reporting how they spend their cash and things like that. So you can't buy $50 million worth of silver or silver futures without reporting that to the public. Of course, it wouldn't show up until the following quarterly statement, but there would be an obligation on their part to report it. So, but I think we're going to see that someday. So, well, we're going to wrap this video up, Mike, with a meme or a quote of the day. I'll let you read that. But first, make sure you, if you have not read Mike's book, you can download it for free right on our website. We'll put the link below here. It's free to read, so we encourage you to do that. So, Mike, give us the quote of the day here.
Okay, this quote is from Voltaire. And he says, and this is before we were using currency. This was money back then. So in general, the art of government consists of taking as much money as possible from one party of the citizens to give it to the other. And actually, I call that theft. If you're doing it, if you're taking it from them without their permission, it's theft. So I want to thank everybody for watching, and thank you, Jeff, for lining up all of these questions and stuff. And we'll see you next time. See you, Jeff.
It was great, Mike. See you next time.